When you think about successful trading, what's the first thing that comes to mind? Finding that perfect entry point, right? Or having some killer strategy. But what if I told you the single most important skill, the one that truly separates the pros from the amateurs, is something most beginners completely overlook? Today, we're pulling back the curtain on risk management. This is the hidden scale, the professional's guide to not just making money, but surviving to trade another day. The legendary military strategist Sun Tzu wrote, "Every battle is won before it is fought." Now, you might be wondering, what does ancient warfare have to do with modern markets? Well, everything. It's about preparation. It means victory isn't found in the heat of the moment, it's forged in the planning you do long before you ever risk a single dollar. So let's bring that into our world. In trading, what does it actually mean to win before you even place a trade? It's not about having a crystal ball. It's not about predicting the future. It's about building a system, a fortress around your capital so that you can thrive even when you're wrong. And that system is called risk management. This is the absolute bedrock of any sustainable trading career. It's how you protect your capital, how you stay sane during volatile swings, and frankly, how you stay in the game. Without it, the best trading strategy in the world is just a ticking time bomb. So here's our game plan. We're going to cover the trader's hidden skill, talk about the core rules of survival, look at your risk management toolkit, identify the dangers lurking in the market, and then wrap it all up by building your own personal blueprint. All right, let's dive in. First up, we've got to talk about the core rules of survival. This is all about adopting a professional mindset. These aren't just helpful tips. For the pros, these are non-negotiable laws. And it all starts with this one simple number: 1%. If you take only one thing away from this whole explainer, let it be this. This is the famous 1% rule, and it is beautifully simple. You should never, ever risk more than 1% of your entire trading account on a single idea. So if you have a $10,000 account, your maximum loss on any given trade is $100. That's it. This rule is what keeps you alive. It ensures that a losing streak, and trust me, they will happen, doesn't knock you out of the game for good. Okay, now look at this, because this is where it gets really powerful. On the left, you see a 1-to-1 risk/reward. You risk $100 to make $100. If you win half your trades, you basically break even. Kind of pointless, right? But now look at the right. With a 2-to-1 risk/reward, you're risking 100 to make 200. Suddenly, that same 50% win rate makes you a very profitable trader. And that's the whole secret. The crucial point is that long-term profitability isn't just about being right. It's about making sure that when you are right, you get paid well, and when you're wrong, you lose small. That's why professionals will almost never take a trade unless they see the potential to make at least double what they're risking. So we've got the mindset, the core rules. Now let's talk about the practical, hands-on tools you're going to use every single day to actually enforce these rules. Your risk management toolkit really boils down to 4 key instruments. We're talking stop-loss orders, take-profit orders, diversification, and a more advanced technique called hedging. The stop-loss order is your ultimate safety net. It's an automatic command you give your broker to get you out of a trade if it moves against you by a certain amount. And here's the critical part. You have to set it before you enter the trade. This takes your emotions out of the driver's seat. No more hoping, no more praying for a turnaround. The decision is made when you're calm and rational. And just so you know, not all stop losses are the same. A normal one is the standard. But sometimes in crazy markets, you can get slippage. That's when your order fills at a worse price than you wanted. A guaranteed stop loss prevents that, usually for a small fee. And then there's the trailing stop, which is pretty cool. It automatically moves up as your trade goes into profit, locking in your gains along the way. Next up, diversification. You've heard this a million times, right? Don't put all your eggs in one basket. Well, it's a cliche for a very good reason. Spreading your money across different assets, different industries, even different countries just makes sense. It means if one part of your portfolio takes a hit, it doesn't sink the whole ship. Okay, so having the right tools is great, but to use them effectively, you have to know what you're up against. You need a map of the terrain so you can understand the dangers out there. This chart gives you a pretty good breakdown of the risk landscape. You've got market risk, that's just the general ups and downs. Leverage risk, the danger of using borrowed money. Liquidity risk, that's when you can't get out of a trade easily. And systemic risk, the big stuff, like a financial crisis that affects everything. But I really want to zoom in on leverage risk for a second, because this is the one that gets so many new traders. Leverage is like a double-edged sword. It can amplify your wins, which feels amazing, but it amplifies your losses just as much, if not more. Using too much leverage is probably the single fastest way to blow up a trading account. It has to be respected. So we've talked theory, rules, and tools. Now let's put it all together. This is where the rubber meets the road. We're going to build a personal blueprint that turns all these ideas into action. Here it is, your 5-step checklist. Number 1, define your max risk per trade. Stick to that 1% rule. Number 2, always plan your exits before you enter. Set that stop loss. Number 3, insist on a favorable risk-to-reward ratio. Aim for at least 2 to 1. Number 4, set a daily or weekly loss limit. If you hit it, you're done for the day, walk away. And number 5, keep a trading journal. Go back and review what worked and what didn't so you can actually learn from your mistakes. This quote just nails the entire mindset shift you need to make. Amateurs are always chasing the big score, focusing only on how much they can make. Professionals, they are absolutely obsessed with risk. They know that if they take care of the downside, the upside will take care of itself. And that really brings us to the final, most important truth. You can't control the market. You can't control the news. You can't control what prices will do in the next 5 minutes. The only thing you have 100% control over is how much you are willing to lose. That is your power. So I'll just leave you with this one question to think about. Your next trade, is it going to be a well-thought-out plan with your risk defined and your emotions in check? Or is it just going to be a hope, a gamble? Because the answer to that question will define your entire future as a trader.